The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. October 10th and Thursday. Looking forward to the show. Should be very interesting because we are bouncing right at that 15,000 millennium level on the Dow in bear phases. The rallies can be vicious and just pummel shorts and get everyone excited, get brand new bulls in, and then you get the real test. So let's do this. We're going to go. Thank you, Steve, for 2 great hours. Always wonderful to be able to come right in here for the 11 o'clock show with a nice, really interesting and educational warm-up. And following me today being Thursday, Larry Pesavento comes on, of course. And full day today, we've got, I'm not sure if Daryl's back. We've got Daryl Martin's show. We've got then Dave White. You've got Andy Hecht. You've got Tom O'Brien comes in at 4 o'clock. Hey, Tom O'Brien, 600th gold report, 600. And folks, this is an opportunity to really get to understand how Tom goes into a plethora of golds. I mean, it's not like he looks at 3 or 4 golds and he puts them. He looks at 20, 30, 40, 50 gold stocks and metal plays. And so this is a fantastic opportunity to get special bonus. Go to the front page of TFNN, because on that front page you will see just all the details about Tom's highly recognized and highly commendable gold report. Just an expert in the gold area, and this is an opportunity to be able to get the benefits, to be able to get the report, to be able to buy it at a special discount. And right now is just a perfect time, because gold is way more interesting now than it was when it's in its major sell mode. So please go to front page, check out. We've got all these different things. My newsletter is called the Opening Call. My very intensive look at the markets using the Chapman Wave methodology. It's based on my CD introducing the Chapman Wave methodology. Let me just show you something here while I'm thinking of it before I give you the numbers. Look at this. This is the Dow. I teach my subscribers how you can look at patterns and they repeat over and over and over and over and over again. From the August high of the 2nd of August at 15,658, the Dow came down in a very systematic way underneath the 9-period exponential moving average. It went down for 15, 16, 17, 18 sessions, consecutive sessions, 18 sessions before it turned around. Then it went up in a left side, right side price time match almost to the exact day. On the 18th of September at 15,709, it gave a reversal signal and has come down 15 sessions up, 15 sessions down. And I did this on my report this morning. Did I do it with the, I wonder if I could show that. I'm going to see if I'm able to do that. Is it going to show up here? Let me just see if this is, no, this is not it. Where did I put that? I had it already. Oh, that's right. I had to restart because I'm doing this all remotely. I didn't want to take any chances yesterday. I couldn't get the camera to work because I had so many things going on here. I'm trying to do on one screen what I normally have 6 monitors doing. So that really put a pressure on. I'll try to go to it in a short while. I wanted to show you something. I'm going to do this right now. You see this declining area coming down here? And this is a report that I give my folks every day. There's this one. I really should show it. I'll try during the break to set it up, because I think it's really important to show the symmetry. Look at the bad news that accompanied the move down from the 18th of September. This whole talk about the debt ceiling, Obamacare or affordable health care, just all this stuff going on. The Yellen coming in, what would it do? What would it do to interest rates? Come on, I'm looking at this chart. The market went up over here. What was the news? Was there an accompanying huge mega bull news there? And look, was there mega bear news down here? No. There's just an order. If you looked at the price and I said to you, what do you think? What was the news going up and what was the news going down? You say, I don't know. It looks like 15 bars going up very strongly above the 9-period moving average and 15 bars going down very strongly in under the 9-period moving average with the MACD turned down, the stochastic flat. In fact, even now with this move up, the stochastic's barely budged. It's gone from like 5%, maybe to 8%, something like that. And the MACD is just flattening out. Big candle. Where did it stop? Right at the 9-period exponential moving average. When it was coming down here, where did it stop on the second day? Right there on the 9-period moving average. So this area is going to be really important. Those are the techniques that I love to teach. See the left side, right side, price time match. See the inside Chapman wave, inside wedge, target zone. Look at the doji candle, really important candle right there. So those are the things for my subscribers. We were able to short the markets. Fabulous gains, had fantastic gains intraday yesterday. Didn't take them, but we're stopped out now for some very nice gains. We did take profits on the way down in different sectors. One of the sectors that we were looking at is still going to be another great opportunity to go to the short side. If you get my opening call, 2-week free subscription, you'll be able to pick that up because there was a fabulous gain in that. And now let's just do this. I'm going to run the numbers. The Dow is up 187 at 14,990. The S&P is up 22 at 1679. The Comp Index is up 56. That really got smacked the last couple of days at 37.33. Gold is down 7 at 1,300. Now I'm surprised. I was a little surprised. I thought it would have a bigger move in gold. No, it just kind of flopped. Had a little pop and then it dropped. So silver's up 5 cents at 21.95. Platinum's up nicely at 16, up 16 at 13.97. High-grade copper is just stuck in this between $3 or $2.90 and 3.30, 3.40. It just can't get out of its own way. Crude oil is up today at 102.96, and bonds are down $1 at 132.04, and the dollar's up a little bit, 0.03. The euro is up. Euro is about unchanged. And now let's go back to our story. When I'm looking at these different examples of what's really important, let me cover some of this. This is the E-mini. I always show this. If you're looking at Tiger TV, you'll see this is the E-mini. That huge bar that we're looking at, that's today's bar. This is the candle that is ongoing. We cannot even talk about it today until 4 o'clock. In the Dow and the S&P and the Qs, that's the cash. But the futures keep trading. So where it trades later on today, going into this evening, is going to be really important. Why? Because you see the stochastic did pop. Oh, it finally got to 14%. Okay, that's very good. It went from the 5% area to 14%. That's not great. It needs to decisively clear 20%. With the MACD turning around. Now, is this a turn that has legs to the upside? We'll cover that in a moment. It's the question that's out there. First of all, here's the 120-minute chart. I use this exact low. I use this as the left side, right side price time match. And in fact, what we've done is the 1679.50 area, the left side high of the 7th of October at 4 o'clock. That's the high bar that we're looking at. Today's high so far is 1676.75, about 3 points lower. What we might see is a little consolidation over the day, maybe a little spike tomorrow. Now, what's really important about this particular pattern is that there is a Chapman wave stochastic MACD squash. That particular pattern says you have an accelerated move to A and then to B and even to C. And then there's a hiatus. And you might make a nominal D, but you got to be really careful at that particular point. Why? Because that's where the market becomes, the price that we're watching becomes most vulnerable. So in the meantime, absolutely nothing wrong. 92% in the stochastic, MACD is expanding. Nothing wrong with this chart. Looks very good. But you see that doji candle? That candles are going to be really important. Now, speaking about the Dow, let me show you something else. I use a couple of moving averages that I consider to be really important. Why are they really important? Because you only need them at certain instances. One in particular, I never need until I need it. It just sits there. I don't even talk about it until such time as it shows up as like a candle, like a gap, just another one of those indicators that says if, in fact, the price is going down or up towards it, that becomes your target line. So the target line now is because the 200-period moving average was hit exactly, I mean, within 2 points. 14,719 was the low yesterday. 14 at yesterday's 200-period exponential moving average was at 14,716. 17, I think it was. Now it's at 14,718. That is unbelievable. It happened sort of as my show was going on. I didn't see it until afterwards. It's a pity because I don't give updates to my subscribers. It's just I've found over the years that there are instances where it's perfect, but mostly what happens, I'm going to give one today at 12:30. Why? I just want to give a general overview. There are a couple of stocks that are interesting enough, maybe on the long side, but there are things on the short side that I'm looking at. So that's the only update. Very often I give the update just infrequently, infrequently I give the update, and very often within the update, all I'll say is, yep, this is what's happening. We're not going to do anything. We've got our trades on. We're quite satisfied. Or I'll say, this is where we want to consider doing something else. So in that context, the Dow it hit the 200-period moving average. Wasn't even in the focus until we started to get to the 14,890s. And now we're looking at the 9-period moving average as perhaps being a major focus here because it stalls right at the 9-period moving average. I want to go to Lou in Nashua. Hi, Lou. How are you?
Very good. And you?
Very well, thank you.
I was just wondering to add to my nat gas calls here.
Okay, so now what's happened is that, folks, Lou's been speaking to me for some time now. We've been looking together at the natural gas. I'd recommended that natural gas has the potential. That was my favorite, not crude oil. Natural gas seems to be the one that has the, it isn't just a short-term play because Lou likes to look out a couple of months. And because he likes to do that, I like to do that in terms of looking at potential in this rotational market. Let me just define something right now. We are looking at a rotational correction thus far. There are stocks that will be absolute spectacular winners that are going to be spectacular losers as far as I'm concerned. They are done. There are other stocks that have held very well that are going to be the rotational favored ones. Whether they become bigger moves or not, I don't know. But they are looking quite good. And natural gas is one of those in this rotational market that I think has the potential to go quite a lot higher. Lou is in it. I'll go through a couple of things with him. It's in Leg C in the daily. We'll be right back looking at whether Lou should add to his calls in natural gas.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back, and We're on with Lou in Nashua, and Lou is looking at natural gas, which he bought the calls, and they're the January calls or the December. January, I think, right? Lou? Lou, you there? Oops, I can hear. I think Lou's on delay. Lou, just yell, "I'm here," as soon as you're back. Now, most importantly, in Lou's case, I'm looking at this and I'm saying, okay, he's already got one position, which is in the money. It's good. I'm going to make a recommendation to Lou. Hopefully he's still there. He can just say, "I'm here" if you're here, or call back. But I'm looking at this and I'm saying, because the doji candle, long-legged doji candle, I had spoken about this earlier on. The long-legged doji in the weekly, the week of the 20th of September, opens at 3.911, closes at 9.32, and that candle wick is just being tested right now. What often happens is, I keep thinking of swinging. Oh man, I can't. I've got a string with a little stone attached to it. I'm thinking the historically accurate movie of, what was it, Moses or something? Well, Ben-Hur, one of those things. Anyway, when Moses swings this little thing and he's about to throw it at Goliath, whatever that thing's called. So this same kind of rotational aspect building up momentum is exactly what's happening, and that's I'm very visual, so I got this picture in my mind. I don't know if I'm imparting it correctly, but think of this as the fulcrum right there. That candle's body, the body of the candle, at around about 3.91, 3.92, and it's gone right back there. What happens? A slingshot, exactly like a slingshot. Thank you, Al. And what's happened is that as it goes by, it can run right through, and it should go to leg C above 4.041. Lou, you still there?
Mm-hmm.
Okay, good. So now this is what I'm going to make a recommendation for. You had thought originally that you'd have positions that you would add, and I had said to you, if you can think in terms of 2 or maybe preferably 3 positions, and so now you've got your first. I'm going to recommend that you add your second here, even though there's a chance that before it gets to the 200-period moving average target of 3.995, let me just see what it was in the 120-minute chart. Yeah, 3.995, that you actually get into that position, even though it might go to the 3.980, 990 level and then pull back quite sharply. I think it's worth getting that second position now. And then the third position, I would wait to either get it at $3.82 to $3.79.90, somewhere around there. But I'd hold off on the third position because you might even want to use it as a breakout. So I'm recommending start the next position right now, another small position, because this is longer term. You're going to be able to add and take off, and you're going to have a lot of fun with this because you got in fantastically. So that's my recommendation. Now, where would I put a mental stop on at least some part of the position? If for any reason it closes at 3.79 and you've already got that second position, I'd say, okay, be a little careful there. If it closes at 3.79, but my guess is the way the charts are building pressure, especially my continuous contract of natural gas, that on a longer-term basis, that monthly chart is going to say that by late December, early January, maybe even mid-January, you could be looking at something in the 450, but I would not be surprised if it goes above the high of 4.644 in the continuous contract sometime in the next 3 months. That's really what you're looking at. I'm completely wrong if there's just an M-shaped pattern and it goes to maybe 4. You still wouldn't mind going to $4 something, I know. But I'm looking at the longer term. But if it only goes to 3.95 and then maybe 4 and then reverses down sharply, I have to consider that it's making the H that goes to an M pattern in the monthly. So far, I love what's going on. Congratulations, you got a great entry, and I'm going to recommend that you that you hold the position and maybe add right now. You can add a little bit to that particular position.
Great. Thank you, Basil.
And thank you so much for calling. Always appreciate that. That's Lou in New Hampshire, and we were looking at natural gas. He is long via calls. That's option calls. And let me just look at UNG. We always talk about UNG. Yeah, UNG now is a little more extended. It's in leg D. So that says that this is leg C in the continuous in the contract and the continuous contract. Could pull back. You can sometimes get a disparity because UNG trades. It's the second derivative. It's actually a third because you've got the core of natural gas. Then you've got the futures, and then you've got the UNG trading as a parallel. So we've got a break coming up here, folks. The Dow is up 197 at 40,999.50, and we'll be right back after these messages, and we'll talk about the market, what I'm anticipating.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. I wanted to show a couple of charts. This is from my opening call. This is my daily newsletter. This is one of them. Every day for the last week or so, I've been showing how the VIX index, based on my methodology, was moving higher, how we got...
So what we're looking at here is this is the volatility index daily chart, and it's moving up, and it's gone to a leg D. There was a left side, right side price time match, which takes you to about the 18th. Well, there's still time for that, but it went to 21.34. What was the target? 21.91. That 21.91 was, in fact, the level that we were looking at. When you go to, let me just find it right here, the chart, that would be right there. And that was the target, 21.91 on the 24th of June. So now what we're looking at is there's a peak D made with a very sharp pullback. It's gone under the 17.81 support. In fact, the low so far today is 17.92. That's a move of almost 4 points down since yesterday's high. What we're looking at is the XIV, which is the inversion of the VIX index, the volatility index, and the volatility index is in fact in leg A. Now what I want to be able to say is, where would the support be on a pullback in the volatility index? Is this it for now? Have we seen, in fact, the high for this move? Are we about to see the market, the general market? Let's just get out of this right now and go to this particular chart here. and say, if we're looking at, let's go to our four horsemen, mine anyway, of the Dow. GE is having a very nice day today. The weekly chart is just stuck in a range. It's at 2407. And I'm going to draw this line here, very important trend line. Just take it from the highs, and you go right down like that. And it, in essence, is breaking out. Let me do that correctly with one hand. Oh, it hasn't quite broken. Now, yeah, it's just about to break out today. But there's a certain pattern to this that I'm not 100% happy with. I don't like to see a narrowing of trend lines. I prefer an expanding trend line like that, parallel or expanding. And in this particular instance, it's narrowing. And that says to me, okay, G is actually very well. And at this particular point, it has a target, a potential target of the next candle of 2435. That's very important. The weekly chart is looking at trading band, just in this one hand, a trading band that held kind of the mid-channel, the 9-period exponential moving average of the weekly chart, which is at 2391. 9-period moving average is kind of like the midpoint there. So far it's good. And the monthly chart is still acting well, but the technicals are failing. So that's one. Let's go to IBM. IBM. And there's a couple of things I want to do right now. IBM is right there. IBM is in leg A. And leg A says it's been a terrible chart formation. The weekly is in leg D, maybe trough D, but it has a divergence between the technicals improving and the price coming down. The monthly is almost gone to the target that I had on the downside. I was just been waiting patiently for the 177 to 175 area. The last low was, I think, 180 something, 178.71. It's getting close, but the MACD and stochastic are terrible. Triple M, which is one of the real stalwarts of the Dow, made a peak D in the weekly. Leg E could be a peak E in the monthly, and the daily made a peak D, and it's pulled back, a very reasonable pullback, considering that the other indices went down to almost their lows, like the Dow did, even under, and the S&P went close. So this has been a very stalwart performer. So Triple M is still looking good, and UTX, my pilot light for the Dow, has had a very strong pullback. I have to call it G in the weekly, D, possible D in the monthly, but this is a peak D, very strong pullback in the daily. So out of the four horsemen, I've only got Triple M that's really showing a good strength. I've got E showing okay, relatively decent, let's call it trading range strength. So now we're going to go to some other stocks. Let's look at the Googles and the NASDAQ major winners. Same thing with Google. Big consolidation taking place, made that peak around number 928 high. You've got Amazon AMZ right there at leg E in the weekly, a peak D, maybe if there's no new high this week, I'm sorry. The technicals are good, but they are turning down. It's holding just above the 90 EMA. There's a Roman candle that so far has formed. We'll see how it closes on Friday at 4. But if that's the Roman candle, we could expect some kind of a pullback. And you've got a peak D top in the daily that was at 322.92, looking for anything else in between. Nope, that's a single leg A down. A decent pop-up, but it's not anything spectacular. So I'm looking at some of the big winners on the NASDAQ price lines included. Price line made a high of 1,000, what was his price line? 1,034, 1,073 was a round number high, but the actual high was 1,074.89. So it's a big peak F top in the daily, a peak D perhaps this week in the weekly, so the week's not finished, anything can happen. It looks like it's really about to have a little bit of a breather, and a doji candle so far in the leg D in the monthly. So I've got out of just the ones that I've mentioned there, you've got high-level consolidations with 1.5 looking like the pullback was very strong and could last a little longer. Now, yesterday I had a call about a Sears Holdings, and I said everything about it says to me it should be a short, but there's such a high level of insider holdings that the manipulation, not manipulation, the squeeze of the shorts going to the upside is so intense always that that's the only thing that would stop me. What? Lo and behold, today it's down 5.57%. And a lousy close yesterday made a 66 round number high that I was mentioning. And that's the way you've got to look at individual stocks. The same way as when I look at the Dow, and I mentioned to my subscribers this morning, in the 120-minute chart, I don't know if I can go there now because if you've got problems. Well, let me give it a try. See if I can find it. Here it is, 120-minute chart. And what I typed in, debt limit and affordable healthcare concerns all the way down. Look at this Dow Diamonds, the Diamonds 120-minute chart. On the way down with the 9-period moving average resistance, look at the way it was on the upside. And in fact, what was the excuse for going up? There was still debt limit talks. There was still affordable health care. So I like to look at the charts, and I like to say, hey, try as much as you can. And, boy, I find that very difficult sometimes to get the emotion out the way and try to trade what Larry always talks about, trade what you see. And I have to congratulate Larry. I believe I just heard him as a little difficult with me being remote here. That I had to shut down soon after I finished my show, but I just heard him talk about the upside potential, and fantastic. That was a great call, great turnaround. For me, the Dow had just hit the 9-period moving average, the 200-period moving average. I didn't realize that at the time, but this is a very strong move to the upside. So I think that now it's time to go to our next caller. We've got Bob and Rumson, New Jersey. Hi, Bob. How are you?
Good morning, Basil. Nice to talk to you.
Nice to talk with you.
My question has to do with IWM. It's just a simple question. I have it, unless my count is wrong, on the daily chart, making a peak C on October 1st. Am I correct or wrong on that?
This is what I spend quite a bit of time when I do my Master Trader series or any one of my intensive courses. There are periods where it is absolutely legitimate if other things are in order to use what I call a phantom peak. I even typed it in. I showed it on my show here a couple of weeks ago. And I explained that the high in the IWM, which is the iShares Russell 2000 ETF, is a subsidiary. It is a secondary to the root, which is the NDX 100. No, what it wouldn't be, it would be the 200. Let me just go through that and I'll explain what I'm looking at here. So the high of, on the 16th of September at 106.08, and the next day at 106.08, those parallel highs, I put a gray letter, I changed the color, so it's an obvious change in my methodology. But because there was so much strength, and because right there on that particular instance, the stochastic had actually pulled back, and the on-balance volume was starting to pull back.
Yeah, I remember that show. Yeah, I do remember that now.
You remember? So what I said is, I'm going to call it the
forgotten.
because I don't want to be fooled
you never really
by holding
that,
for a C and waiting for the D. You were going to say?
Yeah, I'm just wondering, if the B was actually on September 18th at 107.61.
Now, let me explain something else that I was looking at. I actually got a perfectly legitimate in the NDX 100, a perfectly legitimate D on where the C was back on that in mid-September, and that's one thing. And then I went to E in the weekly at that particular point, and the composite, if I can just get this COMPX, the composite, let me just double-check, ABC, yeah, and everything seemed to be working out. The composite has something very different than it very often does. Why? Because the composite, that's a C1, C2, I'm going A, B, C, D, there's D, and there's E. Yeah, so everything worked out. So that's the reason why I was able to pick up the shorts the way we did for my subscribers, based on that in the IWM's case, it was a phantom peak, but it was legitimate because the indexes themselves, the NDX 100 and the composite, had confirmed that they had done exactly what was needed. So when I look at that, now let me just do something else, 79875, 798, 0.75. So that, yeah, I've even got a potential peak F in the weekly of the composite. But now, so that's part of your question, but there's another question that you have, I can tell, about the IWM, right?
Well,
you want to know, is it still going to be able to go to that extra high bar? That would have been your question.
I'm wondering if it is going to take out the 107.93, which I guess it could. Anything can happen.
Okay. So now let's look at something else. I mean, that is absolutely, that's a fantastic, it's a wonderful question, and I'll explain why. Because when Bob had this question about the peak C, and I had actually gone through this in a very legitimate way, especially because the Qs gave us a fantastic short setup, which we took and had a very nice profit in, also at that same level where it made the peak E and then reversed down. What I'm looking at here is that the rotational aspect is so important in this market, and there are a couple of things I'm looking at. First of all, the IWM has held very well, and as we speak, it is way above the 9-period moving average in the weekly chart, and that 9 EMA is at 104.81, and it's at 105.78. So I'm going to do a couple of things when I got both hands free. We've got a break coming up. I'm going to take a moment, and I'm going to put these in, and I'm going to put some trend lines in, and we can talk about it. Would you mind holding on, and we can go through it?
I'll hold, yes. Thanks.
Okay, great. I'll be back with Bob Shaver's break. Down up to 32 at 50,035.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report to celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd. TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
How folks, we're back. Yep, and I think we got all our connections back again. Oh, technology. It's it's not technology's fault. I think I just had too many things going on with the charts that we were looking at. As I said, I'm trying to fit 6 screens onto my laptop. So we're on, and we're looking at. We're on with Bob, and I think, Bob, this is really what I'm looking at. The daily is completed. That's a buy mode that's completed. It went from a sell signal to a sell mode. In this type of market where there's just so much, there was an oversold condition going into the lows, and that was seen by the VIX going all the way to the previous high. That was in the 21s. Now what we've got this relief rally, but the way that the IWM is acting so far is very good. I have an alternate count, and I've actually highlighted that I as crazy as it seems, I still think that it's peak ABC and not a G in the weekly chart. And that says I've got to treat the chart as if the monthly is the key one and is starting to show some signs of deterioration, but the price hasn't deteriorated. The weekly has shown a little bit of deterioration, both in price and in the technicals, but the stochastic still at 90%, and the candle that we're looking at now, if Friday closes anywhere near here, would be a pretty good candle, and this is really disappointing news coming up on the following week. So I think that the IWM is going to be a major tool and a major barometer for us for 2 reasons. One is it's at 105.82. It's up $2.18 just in a blink of an eye. If in fact this rally continues and it makes a new recovery high, the IWM, iShares Russell 2000 ETF, is going to leg D in the weekly, and that says, whoops, now you've got to be careful again. So everything I'm looking at says there could be a counter-trend rally. I'm still looking potential upside resistance. I'm looking at, and now I'll just do a quick overview if you don't mind. So to answer your question, the IWM is acting really well. The weekly chart that's a pretty good candle, but the week's not finished. But as it stands right now, I would not be doing any shorting in the IWM. I probably would say to you, I'm not sure if I'd even want to go long in this environment, the IWM.
I know. Yeah, I agree.
And as far as that is concerned, so I think we need to just step aside just for a moment, and I'll explain why. Because if the VIX, I'll just type this in now. If the VIX at 16.59, that's really low. If the VIX goes all the way back to 15.20, the 200-period moving average, that's saying that there could in fact be something going on in Washington over the next week that does actually resolve to a certain extent favorably, even if it's just for a while. But if the volatility index by Friday afternoon, but maybe Monday at about 2 o'clock in the afternoon, if that volatility index is back at 18.30, anywhere around the 1830 or higher, then risk is going to be, the risk is on. It means that you can, to the downside. So I'm just going to step aside, and I'm looking at certain stocks that I like, that I would actually like to nibble at 12:30 when I do my update for my subscribers. Very unusual. We might just get into a couple of those. I'm also looking at certain sectors that stocks look very weak. So just in sum, as we're about to wrap up, thanks for holding. So I hope that helps you. The Dow has very strong resistance going into 15,130 to 15,170. That's going to be a big test. It went underneath the up channel support in the weekly chart. It's gone back to the support. It's still not above it, but 15,164 is the 9-period moving average. We've got a lot of focal points that we can just zoom in on over the next coming days. But to me, it's the way we come down that's important. Stay tuned for Larry Pizzavento. Once again, congratulations, Larry, on a great call. I'll be back with Tom this afternoon at 4:30.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.